Hey, good afternoon, everybody. Welcome to today's event, Q3 earnings preview. It's Monday, October 23rd. You got John Hopkins here. Tom Bowley going to be jumping in a quick minute. If you happen to be new to Earnings Beats or just stopping by for the first webinar, I want to welcome you. Of course, I want to welcome all of our current members, subscribers. Some of you go back many years. We appreciate your support for all of these years. Like all of our events, this webinar will be recorded. If for some reason you're unable to stick around for the entire event, no sweat. You will get a copy of the recording sent via email with any attachments. Hopefully that'll be sometime today, so no worry there. I do want to mention that for our members, tomorrow is our ETF webinar. You'll get instructions on that one as well. And of course, we have a wonderful library of all the events that we've conducted over a long time. So just many topics that you might find of interest pertaining to the market and technical analysis. Okay, like I said, tonight is a sneak preview of Q3 earnings. They're going to start coming out in droves this week and next. We've already had a few biggies come out. And now over the next few weeks, going to literally get thousands over the next, 3-4 weeks, thousands of reports from companies. And tonight is meant to be a sneak preview of that. And then next week will be a members only event where Tom will delve into those that have reported, as well as some key earnings releases due out as well. So let's go ahead and make sure Mr. Bowley's in the house. How's it going, Tom?
Hey, good afternoon, John. How you doing?
Good. Music to my ears. I'm glad you're here.
Yeah, you'd have done just fine.
Probably. I don't know. I mean, this is what an interesting time, the this volatility in the market, and of course those yields continuing to rise, and now everybody's suspecting earnings will be lousy. At least a number of people think that they're going to have to be adjusted, but I've seen this play before where market gets very, very concerned. Then all of a sudden earnings start come out quite often much better than expected. And then, the whole scene changes. And of course, I looked at your report today of history in terms of the market. So that is going to add a little bit of intrigue and volatility to the market. But the good news, I guess, is that we're getting ready pretty soon to enter into one of the better performance periods of the year.
Yeah, historically, we've got a week to get through. We've been talking about that this morning. We got the gap down, then we got a nice rebound. It looked like things were starting to improve throughout the day. But one of the things I mentioned in the weekly market report when I sent it out was, I'm looking for capitulation. And, it was possible today was it with the gap down and a nice recovery, but the weekly market report went out around 2:00, and in there I said, unfortunately, we still have a couple more hours to go. And when you're in a downtrend, a lot of times you will see afternoon weakness, and that's what we saw this afternoon. Heading in. So I still think we got a little bit more to go here. I'm not quite sure that everything's behind us just yet, but I do think we're getting closer and closer to a very significant bottom, and one that's kind of typical. I mean, we tend to see the market bottom during the month of October. I've pointed out in the past, last 14 bear markets, 7 of them have ended in October, and we've had some other corrections that have ended in October. So this is the month where bottoms generally do form, and I think this one's going to be no different. I think we're going to find a bottom here at some point, probably this week, and I think we'll get a big rebound, and from there, I think we go higher into year end. I think it could be a very significant run, especially if the yields top. And that might be saying a lot, but today was very interesting because, we opened up with those 10-year Treasury yields up, or that 10-year Treasury yield up at 5%, and we finished at 4.84. So we dropped 16 basis points from the open.
Yeah.
And on a daily chart, in fact, maybe I'll go ahead and just start with that as the first chart to look at. But that candlestick today on the 10-year Treasury yield, to me, suggests that we may have topped at that 5% level. Now, hard to say whether it's a short-term or long-term top, but it certainly could be a long-term top. So that'll be one thing that very interesting to watch throughout the rest of this week.
All right, I'm going to go ahead and turn it over to you, and very interested in what you have to say.
All right, well, I'm going to start off first with that chart. And this is that 10-year Treasury yield. And I want you to look at that candlestick because we don't get those big red candles like that very often. I mean, if you go back, here was a top. It was just a short-term little top, and then we ended up going back. But if you look at throughout the last year, we haven't seen a whole lot of those big red candles. And off an uptrend with a negative divergence in play, because that's the other thing here. We have higher price, or higher yield, I should say, with a lower PPO. So we've got a negative divergence at the same time that we've got that bearish engulfing candle. And if you recall, over the summertime in July, we look at the QQQ, that was one of the reasons why I called a top in the QQQ, was we had to move to new highs in mid-July. And with that, we had substantially lower PPO. And that marked the top. I mean, that was it, right? And I think I actually did a video. I think that might have been my YouTube Trading Places live show that I did that day. And I started pointing out a lot of reasons to be cautious the market. And this was one of them, that negative divergence. So when we see the same type pattern set up over here on the 10-year Treasury yield, we saw what happened to the QQQ. After all of that, we had some selling. Selling went down quite a bit, probably more than most people thought, certainly more than I thought. I thought we were going to have a little bit of correction. I didn't know that it would go back down as far as it has. But that could be setting the stage for what we might see in the 10-year Treasury yield for the next few months. We could have topped, and we might work our way back maybe into the mid fours. But usually when you get a negative divergence like this, it does tend to play out, the movement back to the downside tends to play out over a longer period. And so I wouldn't be just expecting like this little pullback we had in August. I think the 10-year Treasury yield easily could make its way back to somewhere between 440 and 460. And if that happens, that could coincide with pretty big market advance. We'll see. Anyhow, but what we want to do tonight with the earnings, give you a sneak preview, is take a look at some of the companies that have already reported. I'm going to give you some of the better reports that have come out. I'll also give you some of the reports come out that weren't so good. And then we'll look ahead to the balance of this week, mostly over the next few days. Not a whole lot of, not as many reports will be out on Friday. So I'm going to really concentrate on after hours today all the way through Thursday afternoon, and go through and show you some of the companies that I think are likely to report strong results and other companies that are likely to report weak results. Now, I don't want this to be confused with companies that gap up or gap down with earnings, because I think that's a whole lot more difficult to predict. But if companies are performing well and they look strong and they come out with good numbers and then pull back, they can create some really good opportunities to get in. And that's really what I do this research for, is to try and find some of those really good-looking companies, good-looking charts. And if they do come out with good news in terms of revenues and earnings, beat Wall Street estimates, but then have a sell-off, maybe it's a sell on the news kind of a thing, sometimes those sell-offs can create excellent opportunities to buy and jump back in to some of these stocks, especially if we're getting ready to go into a period of the year which is much more bullish historically, which starting at the end of this week is just that. From this Friday's close through the middle of January, it is without a doubt the best historical period of the year for U.S. stocks. And that's based on the performance on the S&P 500 since 1950. So we're going back 73 years, over 7 decades. And nothing else compares to the next 2.5 months once we get past this week. This is a bearish week. So I'm a little nervous. Of course, the VIX today was up above, I think it went up above 23 earlier. Let me see. Yeah, got up to 2308, went all the way down, got down to 1948, and then came back toward the end of the day and finished back up above 20 again. So this is the third consecutive day closing above 20. And that 20 threshold, based on my research, that 20 threshold can be really significant. A lot of times in a secular bull market, the VIX will get up right about to about 20 and maybe just a little bit above, and then the market will explode higher and the VIX goes back down. In other situations, we get through that 20 level and we could have, a few days of really nasty action. I've said before, the VIX going from 19 to 21 is not the same as it going, say, from 14 to 16. When it goes from 19 to 21, it breaks into the 20s. It opens the door to the increased probability. I'm not going to say guarantee because that's never the case, but certainly the increased probability that we're going to see some additional selling coming in, and it can be swift. So you just have to be aware of it. We saw this morning, things went down first 15, 20 minutes. We were down quite a bit, came rallying back. Then we weakened again in the close. A lot of earnings coming out this week. There are going to be probably a lot of gaps. I couldn't tell you which way the gaps are going to go, but normally when the volatility picks up and we have a lot of news coming out in terms of earnings, and then later this week, we've got GDP and some other economic reports. Of course, we'll be hearing from the Fed from time to time. All of that, you bundle it up, and a lot of times it all results in some difficult market times in terms of gaps. So I find it difficult to do a whole lot on the long side heading into the close right now. I don't know whether today was the bottom. It just didn't feel like it to me in the last couple hours. But we'll know more, obviously, as the week goes on. But I am, again, as we get ready to go into the rest of these earnings reports and some of the charts I want to take a look at, I just want to make sure I emphasize that this is a difficult week and a very volatile week and can be a difficult week for the bulls. So just keep all of that in mind. The other thing I do want to mention before we get going here is I'm going to be traveling later this week. So for those of you that are members at Earnings Beats, my schedule will be obviously impacted quite a bit. I'll be flying to Seattle on Wednesday. I'll be flying back on Saturday. I will be working with stock charts and in various meetings throughout both Thursday and Friday. So Trading Places Live and the Trading Room. So Trading Places Live on Wednesday morning and Thursday morning, and the Trading Room on the live Trading Room on Wednesday at 10 a.m. All three of those will be canceled. So just want to let you know. So tomorrow morning, I'm going to do the Trading Places Live. That'll be the only Trading Places Live session that I have this week. And also that live Trading Room will be canceled on Wednesday at 10 a.m. Eastern as well. So I just want to make sure everybody's aware of that. My schedule as far as daily market reports is very up in the air. So I'm sure you'll probably hear from John at least once, maybe 2 or 3 times later this week with market updates. Just depends. Again, I just don't know what kind of time and what windows I'm going to have available while I'm out at stock charts. But we are going to be talking about some things that could potentially, we may have some exciting announcements to make coming down the road. So it is a big meeting for us to go out there. Anyhow, all right. So with that, let me go ahead and jump in to what we want to talk about tonight or today. And that is, let's see here. Let's go ahead and start with earnings reports that have come out that have been what I thought pretty good, solid numbers. So all these stocks that I show you have reported sometime in October, mostly just over the last week to 10 days or so. And just keep in mind, every chart that I show you has, and actually I'm in the wrong account, but that's all right. We'll make it work. I'm going to stretch this chart out. I'll resize it so hopefully everybody can see it a little bit better. There, hopefully that shows up on your screen a little bit better. But the first one's JP Morgan, easy beat top line, easy beat bottom line. And if you look at the relative strength line, JP Morgan relative to banks, you'll see it's been going up for months. This is one of your stronger stocks. Now, after coming out with earnings, and there's the earnings, and look at that shooting star candle with heavy volume. Anytime you see like a false breakout like that with a long tail up above it, especially if it comes on volume, most of the time you can expect some selling on the heels of that. And that's exactly what we've seen on JP Morgan. JP Morgan, though, now has come back down closer to that 140 level. I actually like it right around this level. I think this pullback is viable on JP Morgan, but I understand if you want to see a more definitive bottom in the market, that probably makes sense as well. But JP Morgan, I think, looks really good. This is one that I keep on my watch list. PGR, Progressive Corp, look at it relative to its property and casualty insurance peers. Last 3 or 4 months, it's been going straight up relative to its peers. It just broke out recently above that April high. And after gapping up at about 150 and moving to 160, it's now been working its way back down. I actually like Progressive somewhere in the 150, maybe even all the way down to about 144. So that's the gap support zone from its earnings last week. UNH. UNH is another strong stock, really nice run up. This is in the healthcare providers group, and I've talked about this probably starting about a month ago, maybe a month and a half ago, saying that this was a group that I thought was poised to make a run. It had reached channel support, and I'm talking long-term channel support that went back about 10 years. And so it has bounced nicely off of that. It was probably back first or second week of September. But you can see United Health certainly has made a big move. And the overall group, healthcare providers relative to the S&P 500, you can see has been strengthening over the course of the last 7 or 8 weeks as well. But I like the chart. I think, again, the 20-day moving average, maybe even if it gets down to 510, that area would seem to me to be a pretty solid area to think about accumulating UNH. ACI moving to the food, retail, and wholesale group. This was a stock. You can see the relative strength there. Again, all these companies I'm mentioning right now beat both revenue and earnings per share estimates. And there haven't been a lot of stocks that have been doing that. There have been a lot that have beaten earnings, but revenue has been a little bit more of a challenge for a lot of companies in the current market environment. But ACI pulling back a little bit more. I look at these recent lows here, which are down just below 2150. And then if you look at all these tops here, just below 2150. So I'm thinking 20 and a quarter or so, 20 and a quarter to, or excuse me, 21 and a quarter to about 2150 is key support. ACI closed at 2196. Again, just keep that level in mind if we do see further weakness this week. Then we've got Bank of New York, Mellon. This is a stock that recently broke out relative to its asset manager peers. So it broke out with its earnings, looked like it went down initially and then roared back. And on that breakout, you can see we moved to roughly, I don't know, maybe a 6-month relative high, versus that asset manager group. And now it's pulling back down again and getting close. I think this 40-41 area could be a nice entry point into BK. Look at the volume. Over 15 million shares traded the day that it went below 40 and then rose up to 44. That was a really big intraday move to the upside with very, very heavy volume, probably the highest or maybe the second highest in the last year. So it looks like there's a lot of accumulation maybe starting to take place on BK. And again, selling back down into that 40-41 range would be kind of interesting. LMT. LMT is interesting. We still got the overall relative weakness in play, although we've strengthened a little bit. But with the last earnings report, you can see a really nice gap up. Actually, I don't think that was the earnings report. I think that may have been the war or the attack on Israel. I think the earnings report came out right here, and you can see it continued moving up. And I think now probably needs to get through about 454 to the upside. Meanwhile, on the downside, that golden cross, the 20-day above the 50, taking place right about that 430 level. I'm not going to go through all of these because we could literally be sitting here going through these forever, but I'm going to just pull up maybe two more of these beats, and then we'll look at some of the misses. I'll give you the other ticker symbols that I like, but I'm not going to be able to go through all of these. One is Wintrust Financial. Now, this is a stock that's been outperforming the banking group quite a bit and fairly consistently since all the way back in May. So it took its lumps a little bit with everyone else, all the other banks, back in March when we had a lot that, deposit scare with some of the small to mid-sized banks. But after that, it actually showed a little bit of deterioration on a relative basis before what I would say has been some pretty strong relative performance by the stock. So again, beating top and bottom lines, moving to new relative highs. This is about 11-month relative high. WTFC looks like it's improving. The last one I'll give you here is Netflix, because Netflix came out with earnings, had a huge gap up, and it's still performing pretty well. I thought maybe what we'd see is a gap up and then a gap fill, but instead we're trying to actually get a breakout to the upside here. So Netflix came up with a pretty big surprise, certainly surprised me. I did not think the way this stock was trading that it was going to come out with better than expected earnings and revenues, but it did beat its revenues wrong line there, 8.54 billion versus 8.53 billion. And bottom line came in 373 versus 346. So pretty nice earnings report that came out from Netflix. And I think it did shock Wall Street. I don't think Wall Street was expecting it either, based on the way the stock had traded. It was down at a 52-week relative low prior to that earnings report coming out. That's not normally the recipe for a really strong earnings report. But I'm guessing that maybe Netflix, because it's been burned in recent quarters, maybe they were playing it a little tight, over the past few months with Wall Street not really wanting to commit to big numbers, but they certainly posted some pretty good ones. Other stocks that I think have looked pretty good based on their earnings and revenues that have come in. LBRT, LRCX, that's Lam Research, NDAQ, PG, of course, Procter & Gamble, MMC, Pool. If you look at Pool, P-O-O-L, I'll go ahead and pull that one up. The recreational products group's been horrible, but look at Pool actually going up and setting a 52-week high relative to that weak group. So it's not exactly, you look at the stock and you say, well, it's still going lower. It's going lower, but it's actually performing really well if you consider how rapidly the overall group's been going down. So I don't know if that's going to translate into anything down the road, but it is getting close to a couple key support areas. One right here at about 310. Then you got another one down here just a little bit below 300. And we closed today 322. We were down as low as 317. Recently as high as almost 400, about 390. So it just seems like the reward to risk is starting to look pretty good on this stock. And again, they did beat top and bottom line. AT&T, ticker symbol T, Taiwan Semiconductor, TSM. And then one last one, the very last one, I'll give you WSO. This is Watsco. But look at this, breaking out to a new 52-week high right before its earnings came out. And then earnings came out right in here, and we saw some selling. But notice, got some pretty good support right in here, just below 340. Prior highs came in just around 340 here, maybe just a little above 340. So this level is an area where the stock has shown some pretty good support over the course of the last few months. And with the good earnings report, if the market turns back around, this is one that easily could start a move back toward its recent high. Again, remember, relative to the building materials and fixtures group, it just recently set a 52-week high. And so the pullback, of course, the overall market's been pulling back, but this pullback on a leader could become an opportunity. Now let's flip the switch and let's talk about stocks that have really struggled with their earnings over the course of October so far, companies that have not been performing well. And what I like to look at is before these companies come out with the bad news, what were they looking like on their chart? I think it's really important to learn from it. And that's what I try to do. So AEHR, this is a semiconductor stock. And you can see before the earnings came out, the earnings actually came out on the 5th. It was just kind of hovering up here. Relative strength was okay. But after missing, you can see that that completely changed the picture here on AEHR. Gap down, it lost support. It couldn't get back through the 20-day, couldn't get back through gap resistance, and it's rolled over and set new lows. So I see a downtrending stock. I see a really poor relative performer. Right now, I would steer clear of a stock like AEHR. NEOG, this is in medical supplies. Stock going into its earnings report, they reported back on the 10th of October, right in here. But going in, the stock was going down, and its relative strength was at about a 4-month low. So the market wasn't expecting much, and it didn't get much. The stock missed both its revenue and its earnings per share and continues. It right now looks like it's in a bear flag to me. Down move, looks like lower highs and equal lows. I wouldn't be surprised seeing another breakdown here on this chart. SGH, another semi stock. See if we can get the chart to come up here. There we go. So SGH, now we topped back at the end of June on a relative basis. We were drifting lower on both absolute and relative basis before earnings came out. And then the earnings came out and it was a shocker. Company again missing top and bottom line. Big gap down. And usually when I see a gap down followed by a ton of selling on massive volume, if I was going to do anything, it would be to short this stock into any strength. And you can see it tried to move up for a couple of days. Now it's rolling back over. Don't like this stock. I would be very, very careful. I would certainly have no interest on the long side. Moving on to trucking, JBHT, JB Hunt Transport, came out with its earnings. And notice this stock's been trending lower for the most part over the course of the last 10, 11 months. And then we go into earnings. Should we be shocked when we see revenues and earnings miss? I don't think so. I mean, this one did result in a gap down. Again, heavy volume, heaviest volume of the year with a big red candle. That normally is going to lead to lower prices. And that's where we're seeing JBHT move lower. WAFD. This is a banking stock, and there are a number of banks on this list. I'll give you a couple of them. But WAFD, stock's been going down. Here you can see the relative strength's been going down near a 52-week low. They come out with their earnings. They miss top line. They miss bottom line. They gap down, and they continue to move lower, sitting at a 52-week low, or actually at a 52-week low close, not quite to a 52-week intraday low. That was set back in May, but stock does not look very good. Let me give you a couple of other tickers. CCI, CFG, EFX, KMI, that's in the pipelines area, Kinder Morgan. SLG, that's in real estate. Tesla, let's pull Tesla up here. Tesla missed top and bottom line. It gapped down. I mean, I would say volume certainly spiked up. It was the heaviest volume probably we'd seen over the last few months. But overall, we've seen a lot more volume. In fact, the whole move from January to February, almost every single day, we saw heavier volume. So yeah, we had a spike in volume, but today we had what could be maybe a reversing candle, a doji with increasing volume. I'm looking for a reversal here in Tesla. I don't know if today did it. Maybe we go a little bit lower this week again with the traditional selling that we tend to see this week of the calendar month. But I do think Tesla is getting close to a very viable bottom. I think it'll finish the year out strong. We'll see. Other banks that really have not shown very well and missed earnings, missed revenues, UCBI, FFIN, OCFC, and then the latest out last Friday, Regions Financial, RF. Look at the gap down here. Look at that volume picking up and closing at the lowest level. This was an open back in March, and it closed way up here. This was a gap down below any prior close that we had seen on big volume and still drifting lower. I'm wanting to call a bottom on these banks, but they just don't let me. They just keep going down. So I think you have to continue to be careful. If I was going to take a chance with any of these banks, I'd do it with one that's showing leadership relative to its group, not what RF is showing, which is another breakdown relative to the group. A few other stocks that kind of fit the same bill, missing top and bottom lines, not performing very well. ALK, that's Alaska Air, in that airline area. Blackstone Group, that's an asset manager, BX. IRDM, that's Iridium Communications. And IPG, which is a media agency company, Interpublic Group. So those are all companies that really didn't look very good. Most of them didn't look very good going into earnings, and now we know why. So the rest of this presentation, I'm going to deal with stocks, and I want to show you charts of companies that will be reporting this week. They haven't reported yet. Some of them may have just reported this afternoon after 4 o'clock. I haven't looked at any of them. But I do have a few of them here. So a couple that looked pretty good to me going in, I'll show you those, and then maybe we'll take a look and see how they reported. CDNS, this is Cadence Design. Market's been getting killed. Cadence Design just maybe a week and a half ago, 2 weeks ago, set a new 52-week high. And if you look on a relative basis versus software, it had just reached probably a 5.5-month relative high before this latest pullback. So I wouldn't be surprised to see a decent report here. Now, I don't have time to look at the report, but what we can look at real quick is the reaction. And it's down 10. So continuing to move lower. I don't know what the numbers were. If the numbers were good and we're getting this move down, then I think it's generally a positive, and I actually would welcome the move lower. And I'd probably love to see it get back down to about 218, 217, something like that, to test the August low. If the numbers were bad, then I probably would just leave it alone. I'll be looking at that, though, to see later. How about PKG? PKG was looking like pretty good. Look at this relative strength here on PKG. They reported after the bell, or they're supposed to today. So let's see how this one came in. And this one's up slightly. I don't know if the earnings have even been announced. Not a huge reaction, but it is up slightly. Another one that was reporting after the bell I thought looked pretty good was Logitech, LOGI. Could see price action continuing to remain pretty close to 52-week highs. The relative strength has been continuing to climb over the last 3 or 4 months. Let's see what happened with this one after hours. It doesn't look like it's reacted to much in the way of earnings. I don't know if they're out yet, but LOGI at this point pretty flat from where it closed. On the flip side, let's see if I had any negative stocks. No, actually, I didn't. I only have. Let me double check that. Oh, I do have 2 that were reporting after the bell. One is ARE. Did not like this chart at all. Stock's been trending lower. Look at the relative weakness. It's been horrible. This is a pretty good looking long-term chart, but right now this is not a good short-term chart. I just got to see something happen to be convinced that we're going to go higher. But let's see if there's been a reaction after hours. This one's up maybe 1% or so, 95.50. So if we go back and look at the chart, that really isn't changing anything on the chart here. I'd be careful, especially if it missed. If it missed and it's gapping up, a lot of times that's nothing more than a head fake. Could see a big red candle tomorrow. We'll see. The other one that reported after the bell that I thought did not look very good, CLF. That's Cleveland Cliffs continuing. Well, we did set a low in May. We haven't broken below that just yet. Been sideways consolidating, but CLF relative to its steel peers, been under a lot of pressure for quite a while, even though we have come off that recent low. Let's see what happened in after hours. I always hold my breath. Holding through earnings can be tough. Now it's up 2%, not a huge move. And again, probably not changing much on the chart. No, it's not. But we'll see what happens tomorrow, see how it trades throughout the day. You just got to be careful, especially if these companies reported bad results. All right, so those were today's. I'm going to give you some others. I'll give you some strong companies. I'll try to stick with some of them that you're pretty familiar with. First one will be reporting tomorrow morning. That's GE. I mean, GE continues to perform really well. I mean, it's down maybe 10% or so off of its recent high, but with the overall market, what we've done in the market, that's not really bad. And if you look relative to its peer group, it continues to stay up. AD line still not bad. So I think GE's been holding in. I wouldn't expect anything horrible tomorrow morning. Halliburton. You can see Halliburton's been running to the upside. Look at the relative strength. Bottomed back here in July, about the time it issued its last earnings report, and it's been trending up for 3 months. I would expect to see some pretty good numbers. I guess we're going to find out in the morning. Pulte Home. I know a lot of the home builders have been getting hit, but look at Pulte relative to the home building group, right up at a 52-week high. I don't know if that's going to translate into good numbers, but it's outperforming its peers for some reason. And maybe we'll find out why in the morning. Other stocks that I think, I don't want to spend a whole lot of time going through all of this, but I'm going to run through some other stocks that I think look pretty interesting. One that is very interesting to me that I think looks good, I'm expecting a good report out of, is Manhattan Associates. This is one of our portfolio stocks. The stock's taken a beating the last 4 days, but right up until the end of its quarter, I mean, you can see this is a stock that's been outperforming the software group, and software has been outperforming the S&P 500. So you got one of the best stocks in one of the best industry groups in the market. And yet in the last 4 days, I'm wondering if this is just a little bit of a head fake before we get a really solid report. I see a lot of, I guess it is games being played with stocks right before their earnings reports. I wouldn't be surprised to see this as an opportunity and maybe a gap up. But again, it's really more of just an educated guess. It's certainly no guarantee. But MANH was performing really well right through the end of its last calendar quarter. So I would expect to see some pretty good numbers. CME, this is in the financial area. Financial stocks tend to really like the fourth quarter. And you can see CME breaking out to 52-week high over the last 2-3 weeks. And look at the relative strength. CME has been a great performer. It's pulling back, hitting that 20-day. This one reports not tomorrow morning, but Wednesday morning. And so that'll be an interesting stock to watch. Manhattan, by the way, reports tomorrow after the close. How about General Dynamics, also reporting on Wednesday morning? And General Dynamics came out, and of course that was the first day after Israel was attacked, and you could see big move there. But they've got their earnings coming up on Wednesday. They've pulled back. This is a stock that even before that war broke out, look at the relative strength of General Dynamics. Again, over the course of a couple months, it had really shown a lot of relative strength. And so as a result, I wouldn't be surprised to see some good news coming in terms of earnings. Just how about Meta? Meta reports after the close on Wednesday. Meta continues to perform really well. Barely budging to the downside, even though the overall market, has been, I'm going to pull this up on a 6-month chart just because it's hard to see the action, because a year ago prices were down around 100 and it's come up quite a bit. But if we look at the last 6 months, you can see again, this is a stock that just set a 52-week high a little over a week and a half ago. And so I'm expecting they're going to have a good report. Now, whether or not we get a sell-off, maybe it's a sell on the news because the stock's done so well heading into earnings, but I would expect a really good report. If it's a bad report, Wall Street has not been clued in. We're not really seeing any kind of a mass exodus out of the stock. So I think Meta is going to come out with a good report. And, I always wonder, I don't know if the market's going to come up with its low on Friday, the 27th. That would be, obviously from a historical perspective, that would be right on the date when that bottom could hit. But I'm just looking for a bottom this week. And one of the things that I'd be really interested in is if we sell off again tomorrow and we start off week on Wednesday, and then we come back really strong into the Wednesday close, it could set up for a blowout report by Meta on Wednesday. Meta's going to report what they report, but I'm just saying if the market's in a better mood when they come out with a good number, or if they come out with a good number, I think that could make a big difference. So that's one of the things that I look for when earnings season kicks in, because a lot of time the 19th to the 25th isn't very strong. And then once you get past about the 25th, that's when the market tends to start moving again. And so that timing could be just about right. Anyway, I'm just talking out loud, something that I'm thinking about, and we'll see whether or not that materializes here over the next couple of days. If I see a capitulatory move in the market, I'm not going to wait until Friday to buy. If I see a big move down and looks like the market's getting clobbered first half of the day, and then the second half of the day we come roaring back, finish on the highs, maybe print a hammer, something like that, or a bullish engulfing candle, I'll have no problems going in ahead of that Meta report. Another one I wanted to kind of highlight is CMG, Chipotle. It's one of my favorite fast food places. I really like Chipotle. Apparently, the market has not agreed with me for the past 3 or 4 months because the stock's been coming back down. But while the stock's been coming down, it's actually been outperforming its restaurant peers. So it's down near the low. This is maybe a little bit of a reach. Maybe I'm stretching just a little bit on CMG, but it seems like the stock's been outperforming its peer group ever since that gap down with earnings back in July. And I'm wondering if we're going to get a gap going the other way on CMG with a better than expected report. I wouldn't be surprised. Anyhow, let me give you some other names or some other ticker symbols of stocks that you might be interested in. Visa, V. T-Mobile, TMUS. These are stocks that I think look pretty good on their charts. You can always check that out. HES, HES in the energy area. ODFL. Recently, I talked about JB Hunt, the trucker, not doing well, not looking very good on a relative basis. ODFL is the opposite. It actually looks really good on a relative basis. So I'm interested to see maybe if we get a different story coming out of ODFL, which is Old Dominion Freight Lines. All right, that's on those I just gave you are Wednesday morning. Wednesday afternoon, in addition to Meta, Molina Healthcare, MOH, that one I think looks pretty good. The next morning, MasterCard, so that'll be Thursday morning, MasterCard reports. I think that one looks pretty good. Textron, TXT is another one that I think looks pretty good. Oh, LII, I'll show you that one because I really think Lennox looks great. The pullback recently near this support level into this gap support area right before earnings, I think could be setting up. Look at the stock relative to the building fixtures and our building materials and fixtures group right here. Really strong relative move back to the upside. So this is a stock I'm looking for some pretty good numbers coming out. All right, once again, let's flip it now. Let's take a look at some of the stocks that have not performed well and, could be set up for a little trouble ahead. Coca-Cola been downtrending. I'm going to go back out to a year here. You can see Coca-Cola has been downtrending. The interesting part is relative strength's been coming up, but sodas overall have been getting hammered to the downside. So this one, honestly, I probably shouldn't have put on the list. Normally, when I have the absolute price going down and the relative price going up, it's kind of a little bit of a mixture. And so I normally don't include those, but for whatever reason, I included it. We'll see. And a stock that maybe looks a little bit more bearish would be a stock like RTX in the defense area, aerospace, Raytheon Technologies, been going down. Look at the relative strength or weakness relative to its peers in the aerospace group. Not very good. So this is one that I'm expecting tomorrow morning to not come in with very good results. Also 3M, another company I'm expecting not to come in with very good results, breaking to a new 52-week low as we speak. And look at the relative weakness, new lows. This stock's been going through this for a long time. Just can't seem to get out of its own way. I think you just have to continue to ignore the stock. KMB, Kimberly-Clark, consumer staple name. You can see here the stock's been downtrending on a relative basis, still sitting down near its 52-week low. Not really expecting too much there. They also report tomorrow morning, as does GM, General Motors, moving down, knowing Tesla, which was one of the better auto companies, missed on both top and bottom line. Can't make me feel too good about General Motors here going in. This has been a much worse performer on a relative basis in the auto group. And if the best couldn't beat, I don't know, it just makes me think GM may have some downside here. Let's see. Texas Instruments reports tomorrow after the close. Look at Texas Instruments and the move it's been making to the downside. It hit a 52-week low today, down below the low we saw in October of last year. And look at the relative strength. It has just been an abysmal performer relative to the relative to the semiconductors. So I'm not expecting much with that one. How about Snap? Snap's been under pressure for a long time, but the relative strength, it's still sitting down near the bottom relative to the internet group. Could have another, and we just had a couple false breakouts trying to get through that 980 area. I don't know, it just doesn't look very good. We'll see what happens with its earnings. That one will be out tomorrow after the close as well. Then on Wednesday morning, I'll give you one that looks kind of rough to me, and that's Norfolk Southern. Stock not too far from a 52-week low. Relative strength's been horrible. I had hope here for a while. It looked like a lot of hollowed candles. Relative strength was starting to pick up, and then right as soon as it started to show a little bit of strength, right back down again. Now maybe this is a bottoming head and shoulder pattern. Left shoulder off of a downtrend, neckline, head, upsloping right side of the neckline. This could be a shoulder maybe that goes in around 190 or so. So that's a possibility, but overall relative strength weak. I'd need to see some good news here. All right, on Wednesday after the close, how about Align? Remember we had that big earnings report 3 months ago? Seems like 3 decades ago. Stock was trading up near 400, actually went over 400. Since that time, it really has done almost nothing but sell off, and it's lost 1/3 of its market cap in the last 3 months. And the relative strength finally gave in as well, completely faltering against the medical supplies group. I don't know what's going on here, but it just doesn't smell right. We'll see what happens into the earnings report. How about Teradyne, TER? Another one gapping down back here early August, continuing to move lower. relative strength just horrible relative to the semi group. I don't think, stock like this one what was the other one I just showed a little bit ago? Oh, Texas Instruments. I mean, we've got a couple of semiconductor names reporting this week that probably are not going to help that group, at least based on what I'm seeing. So we might have to wait for some other companies in that space to report that are showing a little bit more relative strength before we expect too much from semis. Moving on to the close on Wednesday, or actually that is the close on Wednesday, ALGN and TAER, they were both the close. UPS will report on the open or before the open on Thursday. Just broke down again to a new low. Relative strength been horrible. And if we pull this one up, UPS relative to FedEx, you can see it's been in a long-term downtrend relative to FedEx. And after it's moved up here just recently, could be in line for the next leg down. So UPS, that report's going to be interesting. STM, here's another semiconductor stock, just breaking down to multi-month lows, relative strength horrible. Again, just not a lot of semiconductor companies reporting this week that look like they'll give a lift to the index. All right, and then after the market closes on Thursday, Enphase will report. Wow, this renewable energy stock has just been horrible. It's been now about a year. This was a stock that was trading up near $350. This week, it's now gone down, actually on Friday of last week, and then today, it's gone down below 100. I mean, that is a beating. That's 70% of its market cap in the last 11 months. And the thing is, this is a growth stock. And one of the problems I have with a lot of folks thinking the market's going to keep going lower is that many growth stocks are still outperforming their value counterparts. ENPH is not one of those. This is a stock that has been beaten down. I wouldn't be surprised to see estimates lowered going forward. And I certainly wouldn't be surprised to see a miss on earnings and revenues based on the action we're seeing in price. All right, that is about what I had. I'm going to give you a few more companies, though, that look negative to me that I didn't pull up the charts on. GLW, Dow, DOW, Polaris, PII, Bristol Myers looks horrible. I'll pull that one up for you. BMY, I mean, just look at the chart, just keeps going down. Look at it relative to its pharma peers. Just awful. Wall Street's not expecting much, so neither am I. Hershey's. Look at that ski slope, 270 down to 190. And the relative strength's been horrible, not too far from a 52-week low. PFG, last one I'll give you here. Look at the relative weakness there. 52-week low, this Principal Financial Group. It's in the life insurance area. Got price support at 65, but that better hold. Otherwise, not looking very good. All right, that is it for me. So I don't know if we have any questions, John, but I think, we've been going at it now for about an hour. I think this is a pretty good area.
Yeah.
I'll stop.
Questions, people. I wasn't able to hear all of your charts. Few people asking about Amazon, the big ones, Amazon, Microsoft, Google, and Meta.
Yeah, Meta, I did talk about. Meta, I think, is clearly a stock that looks like it could have a blowout report. Amazon, actually, let me go back here. Let's do it here. So Amazon, I mean, you can see the relative strength kind of weakened in September, and it's just kind of going sideways here along with price. I don't think Amazon's telling us a whole lot at this point. So I just don't have any strong feelings. Microsoft had been downtrending relative to software for months, just recently started to move up, but this is actually during the quiet period when it's moved up. This isn't because Wall Street analysts are actually talking to company management. This is just, I mean, it could be a little bit of a head fake. That's why I'm a little bit nervous going into tomorrow, because Microsoft on a relative basis had been downtrending for months. I'm not so, maybe we go back down and retest those lows one more time. Google, really not looking very good either. I mean, on a move to the upside, on an absolute basis, it obviously has looked pretty good, and it's beaten a lot of stocks in the market. But it's just kind of going along for the ride in the internet space. It's not leading anymore. It was leading. You had a little bit of leadership here. We had a little bit of leadership here, but it's just kind of tailed off. I don't see any bad things. I mean, I certainly don't think this is bad, but I don't know that it's great either. I mean, you can see Google relative to the internet group from a year ago, it's way down. So yeah, internet's been very strong for the last year, but the group has outperformed Google. Usually it's the other way around. Google is usually dragging the group higher. So I just don't know what those reports are going. I don't see two blowouts. Maybe we'll get them. But anyway, I didn't bring them up because I just don't see relative strength or relative weakness. And what I try to focus on when I do this sneak preview is I try to focus on companies that I think are going to report either strong results or weak results. And these just aren't really giving me much clue.
What about ADP and NOW?
Yeah, ADP, I think looks okay. It's moved up back in July, and then when the market topped, it struggled, but it's been going mostly sideways. It's hanging in there versus the business support services group. So I think this one's okay. If I had to, if you said, okay, which way would you go, long or short? I would be long going into earnings, but I don't have to be either one. So I'm not going to be either one. And the other one was Now. Now price action's been okay. Relative strength was very strong, I would say since May, just recently starting to pull back a little bit, but we've been holding on to support. I would be watching support probably close to the 500 level. That's where we have gap support at. So I think Now looks okay. It's one of our portfolio stocks. I mean, I like it. It's just I'm not seeing leadership right now as we head into earnings. So I'm just kind of neutral on the stock right now.
Comment from a member. I've been invested in the model ETF portfolio. ARC, IWM continue to break through support. Too late to sell, too close to a bottom. Any thoughts? And I think we're having a session tomorrow, right?
Yeah, we're having a session tomorrow. I mean, we always end the model ETF portfolio on the 19th. And then recently what we've decided to do is just kind of have a little bit more flexibility on when we start the new one, just because the 19th to the 25th, historically, actually members were writing in and they're, made a pretty good point. They're like, why get in on the 19th if we know historically the 19th to the 25th is not a great time for US equities? And after thinking about it for a while, it's like, well, that's probably true. I mean, originally what we were trying to do is just remain invested at all times. So that's why we got out on the 19th and got into our new portfolios on the 19th. But I actually think this does provide us more flexibility. Right now, we're in the midst of a market that I'm not sure if we're going to maybe tank for a couple of days or if we're about ready to set a major bottom. And so I think sitting in cash right now for at least another couple of days probably makes sense. But as John mentioned, we are going to announce the model ETF portfolio tomorrow after the close. I actually did do the strong ETF chart list, which I'll try to get out to everyone tomorrow. So that one I updated over the weekend. And so, well, not too surprisingly, on the strong ETF chart list was a lot of growth ETFs, because even with the market downturn, growth continues to perform well relative to value. And I think that's a bullish sign under the surface of what we've been seeing in terms of the market moving lower. So as far as those individuals, the ARK, I'm not sure I'm going to do any more of the ARK funds for quite a while. It did rally back today, I guess, a little bit. I mean, we're out of the model ETF portfolio. We're sitting in cash. And we plan to do so for probably the next day or two. And I'll announce the ETFs and also the percentage ownership for each one. That'll be announced tomorrow after the close. And then probably what we will do is enter them on Wednesday. And I say probably just because I'm going to be traveling. I'm going to be actually in the air for the most part, almost the entire day while the market is open. So I'm not sure I'm going to even have a chance to get word out to anybody. Even if I wanted to, I've actually got some other things I'm going to be working on the plane. So we may just go ahead and go in on the 25th, which is Wednesday's close, but I'll talk more about that tomorrow night. And I think what was the other one, John? IWM?
Yeah.
Okay, because we're not in the IWM. We weren't in the IWM on the model ETF portfolio. But I mean, just pulling up the IWM, yeah, it's gone back down. I think the biggest level on the chart, without a doubt, and I've said this many times, is 160. I mean, right before the pandemic, we had a high right about 160. After, well, November, I think that was when the vaccine news came out. In November, we saw a big gap up. So we left that 160 level back. You know, we had gap support maybe at about 158, price support at 160. And notice the lows last year in the cyclical bear market in June, and then again later in the year in September, October, all right about 160. So I think 160 is a major, major support on the Russell 2000. In fact, I would be a buyer at 160 and let the market take me out. If it closes below 160, maybe you give it 158 because there's that gap support. But I mean, you could keep your stop very, very tight on IWM. I think if the market continues to be weak, I would not be at all surprised to see 160 at some point later this week. And again, that's the major support level. And that is where, in my opinion, that would be the absolute best reward to risk level to enter on the long side. Because if it doesn't hold that, I would be getting out very quickly.
All right. I think that's a good one to wrap on.
All right. Sounds good. Appreciate everybody tuning in again. Our schedule, if you came in late, it's going to be a lot different here over the next couple of days. I am traveling out to Seattle, actually to Redmond, to meet with stock charts over the next couple of days. I'm going to be doing a live Your Daily 5. I think that's going to be on Thursday. I think I'm going to be on the Final Bar with Dave Keller on Friday, live in their studio. So make sure you check that out. That usually airs right around 4:00 Eastern on Friday. And then I think I'm also going to be going through an interview that they're going to do. They've been interviewing different folks that have worked closely with stock charts over the years. They've done these interviews. They haven't done one with me yet. So I think they were planning to try to do one of those. That'll probably air soon as well. And then we're going to be having some strategic meetings as well between earnings beats and stock charts. So it's going to be a crazy week. So John will almost definitely be doing the DMR, just a quick market update on Wednesday. Thursday and Friday, he may be subbing for me as well. I just don't know what my schedule is going to look like until I get out there. Trading Places live Wednesday and Thursday morning canceled. I will be doing the one tomorrow morning. And then our live trading room for any members who are in here, our live trading room on Wednesday at 10 a.m. that is canceled this week as well. Just because of traveling. I mean, there's just no way to squeeze it in. So that's it. Appreciate you tuning in. I'll be back next week for kind of a recap of how all these earnings turned out. And then I'll also be giving you some additional earnings that go out even further. But that'll be next Monday night. Tomorrow night, as John mentioned, Model ETF portfolio draft. So make sure if you're not a member, you may want to sign up. Our Model ETF portfolios, our portfolio has been really strong since back in the February to May period of 2021. We took it on the chin when all the growth stocks got hammered because inflation started picking up. We fell like 9 percentage points below the S&P 500. We are now back up above the S&P 500. We've made up that ground. And I think we have a really unique way of looking at putting together that model ETF portfolio. And I'm going to talk about that tomorrow in the Trading Places live session. So anyway, have a great evening, everyone. Hopefully see you tomorrow morning for Trading Places Live. Happy trading.